Bitcoin, how to make money by managing risk. If you approach any financial market with a reckless attitude, you will ultimately lose your money. Today, I'm going to show you some specific guidelines to help you determine your risk tolerance. But real quick before we do that, I want to take a look at Bitcoin. There's something exciting going on here. Bitcoin has been in a downward slide for some time. We're running off to the side, which is one reason I wanted to do this risk analysis today. Almost looks like nothing is going on here. Slide uptrend. It's about to bump this EMA, potentially moving down a little bit. But then we pull up the Ethereum charts. Things are looking way different over here for Ethereum. Right here you had a hammer, which I did a video on previously. Here you had a confirmation day to let you know to enter the market. Now this wasn't ideal time based on EMAs. If you go back and check some of my previous videos, I don't want to redo all that right now. But it goes on up. Right here is the prime entry day, and you can see it's followed up by a good strong up day today. So my hope for Bitcoin is that there's a lot of positive trading going on over here in Ethereum, and I'm hoping it will be the catalyst for Bitcoin. Bitcoin isn't quite there yet, but it is showing a little bit of want to. There's no way I would invest in Bitcoin right now if I wasn't there. But with Ethereum having such a large market cap, I'm hoping it will give the momentum for Bitcoin to break through and drive back up. So now let's talk about how to determine your risk. So in managing risk, you have, first of all, there's different levels of the type of investor you are, and the one I am in Bitcoin or crypto is the low risk investor, a low risk trader. And the reason I am is because crypto is highly volatile, it's unproven, many of the exchanges are unproven, it's unregulated. I just saw last night there was $500 million that got crossed up in a Japanese exchange. Somehow I didn't get into all the details of that, but there's crypto that just comes up missing, and for that reason I can't afford to put my family's money on the line, and I consider all my money my family's money. I can't put my family's money on the line in a large way. So as a low risk investor, I'm willing to risk 1 to 2% of my total equity, which means that if I had $10,000 to invest, I would only risk $100 to $200 per trade. If I had $100,000 to invest, I would only risk $1,000 to $2,000 per trade. All right, the next kind of investor we're going to talk about is a medium risk investor. Now this is me in the conventional stock market. That's somebody who's willing to risk 2 to 5% of their total equity. And that's what I do with my more secure investments, like stock market, indexes, options. I would do that over there in that world. Then you have your high risk investors, which I have done this in the past, and it took me a while to figure out that this did not work for me. These are people who's willing to risk more than 5% of their total equity. High risk investors. All right, and then you have the last kind, certainly not least, because many people fall into this category, is the reckless investor. These are people that's willing to risk 20% of their total equity in a trade. And I have to say, I've personally done that before too, back when I was getting started. But now I realize that trading isn't about hitting that home run, it's about getting base hit after base hit after base hit. You want to get mathematical probabilities in your favor and get a base hit, and when it does not go your way, it does not sink you. One thing people need to realize, that every time you lose money, you have to make a greater return to get that money back. So for example, if you invest $10,000 and you're, say, a high risk investor, and you lose 20%, that knocks you down to $8,000. But in order for your $8,000 to get back to $10,000, because you're dealing with less equity there, you have to make a 25% gain to offset that 20% loss. So every time you take a loss, it's not an equal sum game, you have to make more money. So that's managing risk in your portfolio. You must do this to be successful. If you can't do it, it's just trader immaturity is all it really is. You got to figure out that self-discipline and figure out how to manage your risk. In a future video, we'll talk about managing risk on each individual trade. This video just covers your risk management for your portfolio, which is a must. So I'm putting together a PDF of my complete trading system. It has taken me over 2 decades to develop this system. So you'll want to keep checking in with this channel to make sure that you can snatch up this PDF just as soon as it becomes available. I will also keep making new videos each day. So like and subscribe. Be sure to ding that bell so that you can get notified when I come out with a new video. In trading, you must train yourself to be like the lion. Most people do business and trade like a scared gazelle. Train yourself to be like the lion. Dominate your domain. Analyze, educate, and when it's time to take care of business, you take care of business. Remember, if you don't kill it, your family doesn't eat. This is Blake Storm, SniperInvestor.com.